Hello traders, the title of this video is Currencies Correlations, how to day trade using currencies correlations like a pro, part 1. Alright, so I will be recording 3 videos that will form this series of video about how to day trade using currency correlation, part 1, part 2, and part 3. So this is the first video. I need to remind traders that we are recording this video today because a subscriber to our channel, Harry, in fact, hello Harry, has asked a very important question that how one can use a currency correlation. All right. So a few days ago, exactly on the 5th of November 2017, I have recorded a video that we have titled Talking About Currency Correlation Trading Tactics. So I highly recommend to traders to watch that video so they may understand more, okay, what we are about to discuss today, because in the first video I was giving more explanation about currencies correlations. All right, so how do you day trade using currency correlations? Part 1. All right, so in the first video today I will talk about how, so in order to use currency correlations, all right, for day trading purposes, we want to day trade, okay, the number one currency correlation play. You understand? So the number one currency correlation play in the Forex market is the dollar Swiss franc and the euro dollar. This is the number one. So if you don't know, if you don't understand this, it means that you want to watch that video that I've already mentioned to you. Okay. All right. Very important. So those who are trading currency correlation very often will be watching the dollar Swiss franc and the euro dollar. Right. Now for us, because we are day traders, we want to use a chart pattern. That's not the only way to day trade using currency correlation, but in the first part of this series of video, we will use a chart patterns, all right, to day trade the currency correlation. We understand, or we know, or we already know that if the euro dollar, euro USD is going up, the dollar Swiss franc will be going down. In theory, all right? Sometimes they do not do that, all right? Not always, but very often that's what you will see. But if the euro dollar is going down, the dollar Swiss franc will be going up. So this is what we say. Those two currency pairs are negatively correlated. All right? So we can play with that as a day trader, but we will use, okay, for this example, chart pattern. Normal chart pattern. All right, we will be talking about Elio chart pattern later on, but just normal chart pattern. So if we go quickly, I'm looking at the dollar Swiss franc on a monthly chart. You will see that that negative correlation was in place in September and October 2017. So you can see that the dollar Swiss franc was going down in September and October 2017. At the same time, okay, the euro was going down. So this is the month of September for the euro went down. Month of October, the euro went down, all right? So that negative correlation was verified. Sometimes it may not be verified, all right? Going back again to the dollar Swiss franc. So as a day trader, all right, you want to use the daily chart. So note it down, daily chart. Okay, you are a day trader. You consider yourself as a typical day trader. In fact, today I sent email to one trader asking him to confirm whether he consider himself more as a day trader or a swing trader. All right, very important. So we go to the daily chart and we are looking for chart pattern. So as a day trader, we are more interested in short-term trend. So our higher time frame is 1 day daily candlestick bar, 1 day chart. So as a day trader, we are using a daily chart. All right. Okay, if you are TSCWSY is your A trader, don't change anything because everything is there. I'll be talking more about swing trading and other thing about swing trading later. All right. For day trader, use the daily chart, looking for chart path. So you can see that beginning of September, the euro dollar exhibit a bit hidden inverted head and shoulder chart pattern. On the daily chart, here you see beginning of the month, you see here. All right. So if you see a bullish chart pattern on a daily chart, you want that bullish chart pattern to be formed on or near a monthly chart key level. Note it down. So you're on a daily chart, you're looking for bullish and bearish chart pattern. But anytime you see a bullish chart pattern, you want it to be near, okay, a monthly chart, a key level. So here it is. We have an inverted head and shoulder chart pattern. I'm on a daily chart. I'm going to go quickly to the monthly chart to verify that bullish chart pattern is near a key level. So this is happening near the green line. You see here, this is a key level. Price went down, found a support, okay. It breaks a ball, retest here. It's a key level on a monthly chart. So I will be happy to work with that, okay, bullish chart pattern. If that is not the case, I will be a little bit careful. You see that green line we see on the monthly chart? We are now on the daily chart again. So here it is. So because the euro dollar is negatively correlated to the dollar Swiss franc, now we go to the dollars. Now, in fact, apology traders, this is a dollar Swiss franc correction. We are looking at the dollar Swiss franc. So the dollar Swiss franc, not the euro dollar, has exhibited an inverted head and shoulder chart pattern near a monthly chart key level. So because this is the dollar Swiss franc negatively correlated to the euro dollar, what will you be expecting on the euro dollar daily chart at that point in time? If the correlation is in place. If the correlation is in place, we will be expecting the euro dollar to exhibit a kind of, I'm using my word very, very carefully here, a kind of bearish chart pattern. The number one bearish chart pattern that we will be expecting, because this one is an inverted head and shoulder chart pattern, we will be expecting the opposite of the inverted head and shoulder chart pattern. But we're just expecting a bearish chart pattern. Okay, but normally we'll be expecting for the euro dollar to exhibit, okay, a head and shoulder chart pattern, which is the opposite of the inverted head and shoulder chart pattern. But it's not important. The most important thing for us is that the dollar Swiss franc at the monthly chart key level is showing us a bullish chart pattern. Now we go and check whether the euro is showing us, okay, if the dollar Swiss franc is showing a bullish chart pattern, we'll expect the euro dollar to exhibit a bearish chart pattern. So let's go now and check the euro dollar. Again, you see here, this is the month of September. You see the vertical line, two vertical line, red line. And at that point in time, very interesting, you see here, we have a very fine, I don't like this very much. It's not a gorgeous, so to speak, head and shoulder chart. This is the head, this is the left hand side shoulder, this is the right hand side shoulder. So at the time when the dollar Swiss franc was exhibiting on a daily chart, an inverted head and shoulder chart pattern, the euro dollar was exhibiting a bearish chart pattern, which is the head and shoulder chart pattern. So it does not have to be exactly on the same day, but in this case, it was almost the same day. This is 18th of September. The pattern is almost completed on that particular day. All right. Now, I mean, in fact, it was completed after this candlestick bar here. So you see now. Negative correlation means that if we are using a chart pattern for day trading, we look on a daily. So now here we see, before I continue, okay. So now we see a bearish chart pattern. We will check the monthly chart, whether this bearish chart pattern is being formed on or near a monthly chart key level. Pay attention to this pink line here, because it's a monthly chart key level. All right. Very, very important. A pattern together with a key level. So this is the pink line that I'm talking about here. Is here a key level on the monthly chart? Look carefully here. Attention here. This low here. Down. find a support on the pink line, bounce up, try to come back near the pink line. It's a key level on the monthly chart. So what has happened here? The price break below that pink line here, and then came back to retest. Break below, retest. Prior to bearish signal below that key level. At the same time, on the monthly chart, we see for the euro dollar a head and shoulder chart pattern. Now, though this is very simple, anybody can understand this and say, Joe, shut up. Okay, I already understood what you are saying. All right. Don't carry on with your blah, blah, blah anymore. What is the next step? As a day trader, you will now, so at this point in time, this is your trading setup for that currency correlation trading, euro dollar, and the dollar Swiss franc. So you will be looking for an opportunity to buy the euro, and you will be looking for an opportunity to sell. Okay. You will be, in this case, you'll be looking for an opportunity to sell the euro dollar because we have a bearish chart pattern, and you'll be looking for an opportunity to buy the dollar Swiss franc. But the next step is to use what we call a different time frame trading method to control the risk without ignoring the economy news at forexfactory.com. It went beautifully. Look, it went up. So, okay, here, daily chart. One day, look at that, down. All right, so euro went down. Okay, dollar Swiss franc went up. All right. So sometimes, as you can see here, the bearish chart pattern will be formed first, and then the price will go down, and then the following day, so you went down one day, you are in profit nicely, you say, wow, George, I love you so much. The following day, you try to buy, straight away, price bounce up. You say, oh, George, what are you talking about? Following day, it went up again. So if you went down like this, price does not go down in a straight line like it did here. You see, sometimes it goes down, it goes up, goes down, but it went down for, you see, it's going down, but it's not going down in a straight line. So that's why we use a different time frame trading method. That's why you are looking for a trading setup. So if you sell the first day as a day trader, all right, be careful, be very patient. Wait for another setup again. Here it is. So this one came down, rally up to the 50% Fibonacci retracement level, or that long candlestick bar, blah, 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 candlestick pattern. You can use that in conjunction with candlestick pattern. And then again, you can look for an opportunity to sell here. Don't just sell and say, oh, I need to sell, I need to sell, I need to sell. Use a different time frame trading. So as a day trader, you say daily chart, all right, hourly time frame, and 10-minute time frame. So you will be day trading on a 10-minute time frame. All right? You will be entering your trade on a daily chart. So you say, George, this is swing trading. Don't, if you are TSCWSY use your A trader, don't confuse what we are doing there with what I'm talking about here. Don't ask a question about this because it has nothing to do with TSCWSY use your 8. All right? That's it. Okay? The reason why I would want day trader for the first time in their life to go to the daily chart is because you are concerned about short-term trend and your higher time frame is the daily chart, okay? And you will break it down, so at that point in time, you go to the hourly time frame, draw your channel, draw your trend line, okay? And then you will look for a clear-cut, okay, signal on the daily chart. And if the signal is fire or a good reason to buy or sell on the hourly time frame, and from there, it can be again, you'll be looking on the hourly time frame for bullish chart pattern, bearish chart pattern, and so on, all right? And then from there, you are certain that, okay, now it's going to go down, and then you go to the 10-minute time frame, okay, to sell the euro dollar on that particular day. All right. So this is just one example about how one can use currency correlation for day trading purposes using, okay, chart pattern. All right. Now, I don't want the video to be too long because I don't want it to be too long. We will come back to those topics again, and I will be showing you more examples, going a little bit deeper and explaining. So if you have any question or suggestion, put in the comment section about this video. And in due course, I will record another video again, all right, to answer your specific question. So I'll give it to you like this. Go to the daily chart, all right, look for normal chart pattern, all right. So now we are talking about two currency pair that are negatively correlated, okay, euro dollar, okay, was going down, exhibiting a bearish chart pattern, a head and shoulder chart pattern. At the same time, dollar Swiss franc was exhibiting an inverted head and shoulder chart pattern, which is a bullish chart pattern, confirming that one is about to go up when the other one is about to go down. Because we already know that they are negatively correlated, we want to play them. But anytime you are doing that, be careful. Be very careful and use a thorough different time frame trading method. Otherwise, you're going to lose double. So if the euro instead went up and the dollar Swiss franc instead goes down, you lose double. So when you are playing the currency correlation, time it carefully and control the risk carefully. All right. So this is it. I will show you another example. So you may say, George, this is about negative correlated currency pair. What about, okay, positively correlated currency pair? So on that particular time, the euro dollar, as I show you on the monthly chart, on a daily chart, was showing us, okay, an inverted head and shoulder chart pattern. We also know that the British pound US dollar is positively correlated to the euro dollar, yes or no? So here, because the euro is about to go down, we will expect the British pound US dollar also to be going down, yes or no? It does not have to, but in theory, that will be our expectation, yes or no? So talking about how to use the chart pattern for day trading, currency correlation, what will you be expecting for the British pound US dollar? You'll be expecting the same chart pattern in normal condition, or a kind of a bearish chart pattern for the British pound US dollar. It does not have to be exactly the same bearish chart pattern, but we will want to see the British pound US dollar also being a bearish. All right. Let's go and check on the British pound US dollar. Here it is. So how I get my two vertical lines, September to the end of October here. And that particular day is right here, is the 18th of September. Here it is. So the British pound US dollar was just going up, going up, going up, going up. What's going on here? Didn't show any proper bearish chart. So you may argue and say, George, it looks a little bit like a double top, but I don't like this kind of double top. As I explained to trader before, we want the two top to be a little bit, okay, apart. All right. So this is quite close. I don't like those ones. So I will say, all right, so here it is. Look at this candlestick bar. So we're now checking the candlestick bar with the shadow on top indicating to us that people are selling here. So you may wonder, why are they selling here? It is a resistance level, so we are from the daily chart, we want to check at least, are we at a resistance level, are we at a key level on the monthly chart for the British pound US dollar. Here it is, that's the red line here. You see that red line? This one. That's where we were. So it was again key level on the monthly chart. Every time you're on a daily chart, using a daily chart, you see any pattern, make sure that pattern is near key level or the monthly chart. We're going to talk about all this later on, okay? So you may understand more about, okay, swing trading and day trading, all right? Here it is. It's a key level on the monthly chart, probably changing direction here. Again, here you can see that it breaks below that red line, retest it here, retest it again. This is an inverted hammer here, a bearish inverted hammer that retested the key level and then it went down. So it's a key level. So we go now to the daily chart. We are happy now. Yes, you see, it's a verification. We are happy that this is happening. This the pin with a long tail. I talk about this particular candlestick bar. I think at the Day Pro Trader YouTube channel or True for Stock Trader YouTube channel. One of those two channels I was talking about. The inverted, okay, hammer or doji with a long, okay, shadow piercing through a key level. You remember that? This is it here. But there are more to this here. All right. You see why sometimes the video are too long? When I'm explaining more and more and more things to trade it, the video end up being long, you see. So here, there is another reason why this is a sell zone. Traders that are following us at Day Pro Trader already know this. If a financial instrument breaks above the prior high, the next challenge for that bullish momentum is what? Trader noise. Traders that are following that noise. It's the 138.2% Fibonacci extension level of the prior bullish move. So if you don't understand what I'm talking about now, this is it, 138.2%. But I do not use 138.2%. I use all the time 138.0. Look at that. So prior breakable, the prior high here. We apply Fibonacci extension to that. The next challenge is this level. Here we are. It's also corresponding to that red key level on a monthly chart. So we have two good reasons why this inverted hammer or inverted doji piercing through with a long shadow, piercing through a key level will be a good one for us. After this bullish candlestick bar, they retest. Boom. Here it is. People selling down. Next step, remember to use the top-down trading method. So on the daily chart, you see that you say now, oh, all right, it's looking bearish. Once you see it like this, you are happy. You say, all right, the euro is exhibiting a head and shoulder chart pattern. Let's see what the British pound US dollar is doing. Normally, it should also show the same pattern. But if the euro is exhibiting a bearish chart pattern, we want to see also the British pound US dollar showing us a kind of bearish chart pattern. Here is one here, a good reason why we should sell. So now you say, oh, George, I don't understand the top-down trading method. So all right, don't worry. Go to the hourly time frame and try to see at that point in time whether there is a good reason to sell on the hourly time frame. All right, that's what I meant by using multiple. If you're on the hourly time frame, you see that, all right, it's looking again bearish here. Now drop down to the 10-minute time frame to day trade. On the 10-minute time frame again, you are looking again for a reason to buy or to sell. All right. So in the next videos, so this is the first part of this series of video, I'll be talking about how to day trade using currency correlation like a pro, part 2, part 3. In those videos, I'll be talking about economy news. By the way, the same trader did ask me, how do we use economy news? So watch it out, stay tuned. I'll be talking about economy news, how we can use currency correlation with the economy news, all right, to make excellent decisions, all right, for day trading purposes. Again, in the third video, or the second one, I'll be talking about the lagging of a price structure. All right, lagging of a price structure. So one currency pair move fast, the other one is slowing down, did not move at all. All right, it happens sometimes. And then we can play with that lagging attitude. We can take advantage of it, lagging of the price structure, lagging of the price action. We can combine it with the currency correlation to make excellent decisions. So to give you one example very fast is that the euro dollar moved fast up, but the British pound didn't move. So we keep our eye on the British pound, all right, until it starts moving, because in normal conditions, you should follow the euro. Sometimes it will slow down because of the hedging activities. I think I've talked too much today, so it was not my intention to make it long. But if you want to explain things clearly to traders, this is what usually happens, all right? So put your questions and comments in the comment section, all right? And I always read them, and in due course, I will be recording another video to answer your specific question, all right? If you find this video truly useful to yourself personally, give us the signal, thumbs up. If you dislike it, please let us know, thumbs down. If you think this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. So this will conclude our first video for the series of videos that we go about to talk about, okay? About currency correlation, how to day trade currency correlation like a pro, part 1. In this tutorial, we were using a tactic that is referring, okay, to a chart pattern, comparing, okay, the chart pattern that are showing up for one currency pair, and then in conjunction with, okay, currency correlation, we make excellent decision by checking other currency pair, okay? In all cases, my friend, we go first to the daily chart, because for day trading, our higher time frame is a daily chart, all right? And then, if we see a pattern, we check the monthly chart. Is the pattern at the monthly chart a key level? Very, very important. Good. Now, is the correlation in place? So you are comparing two currency pairs. Is the correlation in place? Good. If the correlation is in place, you want to play it. Do not forget to use a different time frame trading method to control the risk. All right. As always, if you learn something new for the first time, all right, best approach. All right. That's what I say to today. You are a TST trader. You purchase TSTW trading system. First 2 weeks, just don't play yet. Go through the document, work on it, use a demo account, try to understand it, and master it. Same thing on YouTube. You watch a video like this. Okay, you like it. It makes sense. Now, develop the skill, the experience, and master it. Otherwise, you're going to go from one system, one method, one strategy to another method without mastering anything. Take one at a time, master it before chasing another one. Okay, that's the best approach. All right. So this will conclude our discussion today about the currency correlation, how to day trade using currency correlation like a pro part 1. Happy trading to you all, and until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.